Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start the problems on CVP analysis in the subject Financial Decision Making 2. Already 4 videos I have uploaded on theory regarding what is CVP analysis, what is break-even analysis, and what is PV ratio, contribution, break-even point, margin of safety, etc. And apart from that, cost. What are the different types of costs? Then the concepts or areas where this CVP analysis will be used. Example, make or buy decisions, key factor or limiting factor, plant to be continued or shut down, or similarly many other special order pricing. All these topics I have already covered in the last 4 videos. And remember, the problems are based on the formulae. So until and unless you are conceptually clear about the different concepts which I have explained, like contribution, PV ratio, break-even point, margin of safety, and different formulas, you cannot be able to understand the problems. So my suggestion, first of all, watch the first 4 videos thoroughly. Then only you can be able to understand the problems. And always keep a notebook, calculator, pen ready while watching the video, because when I say the formula, immediately you should write it down. So before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. So without having the problems, you cannot understand my lecture. So always keep it ready. Take the screenshot of the points which I have written on the board. Then I'll explain every point in detail. Now, see the problem number 1. First problem. Calculate break-even point. BEP stands for break-even point. When variable cost per unit 2 rupees, total fixed cost 40,000 rupees, and selling price per unit 3 rupees. It's very easy problem. Only thing, you have to remember the formula. So what is the formula of BEP in units? Break-even point in units is equal to fixed cost divided by selling price per unit minus variable cost per unit. So in our problem BEP, we have to find out variable cost per unit is given 2 rupees, selling price per unit is given 3 rupees, and total fixed cost is given 40,000. Now your job is to remember and apply the formula. BEP in units, fixed cost divided by SP per unit minus VC per unit. So fixed cost 40,000, SP 3 rupees, VC 2 rupees. So 40,000 units is the BEP. BEP can be calculated either in units or in amount, rupees. So if you want BEP in rupees, simply multiply BEP in units with selling price per unit. So BEP in units, we got 40,000, and selling price per unit is given in the problem 3 rupees. So 40,000 into 3, 1,20,000 is the BEP. So BEP in units, it is 40,000. BEP in rupees, it is 1,20,000. That's all. This is the first problem. Now, second problem. Find the amount of variable cost from the following information. So we have to find out the variable cost. The information given: sales 2,85,000, fixed cost 50,000, and profit is 60,000. So 3 values are given and we have to find out the variable cost. So variable cost we have to find out. Sales 2,85,000, fixed cost 50,000, profit 60,000. That is given. Remember, marginal costing equation. The marginal costing equation says S minus V is equal to F plus P. What is S minus V? Contribution. Contribution is equal to sales minus variable cost, or contribution is equal to fixed cost plus profit. Both are equal. That means we can say the contribution as S minus V, or we can say the contribution as F plus P. Both are contribution. So we can make an equation S minus V is equal to F plus P. This is called marginal costing equation. In this 4 variables are there: S, V, F, P. Out of these four, three variables are given in the problem. The three variables are sales are given, fixed cost are given, profit is given, variable cost we have to find out. So sales 2,85,000 minus V is equal to fixed cost is 50,000, profit is 60,000. So 50,000 plus 60,000, 1,10,000. So 2,85,000 minus this 1,10,000 is on RHS. So take it on the LHS, left hand side. So plus will become minus. So 1,10,000 minus. Take this V from LHS to RHS. So minus V will become plus V. So 2,85,000 minus 1,10,000 is 1,75,000 variable cost. That's all. Two problems completed. Now, problem number 3. Calculate the break-even point from the following figures. Sales are given 3 lakh. Fixed expenses are given 75,000. Direct material, direct labor, direct expenses. Now new point. Remember, direct material, direct labor, direct expenses. If you combine these three, you will get the variable cost. So variable cost consists of direct material, direct labor and direct expenses. So here sales are given 3 lakh, fixed expenses are given 75,000, variable cost to direct material, direct labor, direct expense. Add up the three, 2 lakh rupees variable cost. One formula is there for BEP. According to the information given in the problem, we have to apply that formula. We have different formulas. Earlier we have applied the formula BEP in rupees equal to BEP in units into selling price per unit. But now I am applying the formula F into S by S minus V. Here per unit information is not given. So we cannot calculate BEP in units. We can calculate only BEP in rupees. So BEP in rupees, F into S by S minus V. Fixed cost into sales divided by sales minus variable cost. All the figures are given. Fixed cost is 75,000, sales are 3 lakh. So 75,000 into 3 lakh divided by sales minus variable cost. 3 lakh minus 2 lakh is 1 lakh. So if you cancel the 5 zeros in numerator and 5 zeros in denominator, then what will happen? 75,000 into 3, you will get 2,25,000. This 2,25,000 is the BEP in rupees. That's all. 3 problems completed. Now see the fourth problem. A company's turnover in a year was rupees 50 lakhs and its profit is rupees 5 lakh. Its PV ratio was 40%. What was the break-even point? BEP we have to calculate. The information given is turnover. Turnover means sales. Sales are given 50 lakh and profit is 5 lakh. See here. S stands for sales, 50 lakh. Profit 5 lakh. PV ratio is 40%. We have to calculate the BEP. Remember, for calculating the BEP, we need fixed cost. And fixed cost is not given in the problem. So our job is first we need the fixed cost. So how to find out the fixed cost? Use the PV ratio. The PV ratio formula C by S. C by S. The PV ratio is also already given in the problem 40%. If you take 40 here, you have to multiply this C by S into 100. If you take 40 here, then you have to multiply by 100. If you don't take 40, if you take it in fraction, actually 40% means 0.4. 40% means 0.4. 40 by 100. 40 by 100 is 0.4. So we can say 40% or we can say 0.4 means same. If you take 0.4 here, don't multiply by 100. Right? Now, PV ratio 0.4, C. In place of C, we can take S minus V or we can take F plus P. Anything we can take. Already this thing I have explained you in the last theory video. Contribution stands for sales minus variable cost or fixed cost plus profit. Here I am taking F plus P. Why? Because I need fixed cost. I want a fixed cost. Without fixed cost, I cannot calculate BEP. So F plus P by S. Now we substitute the values 0.4. F we don't know. We have to find out. Profit is given in the problem 5 lakh and sales are given in the problem 50 lakh. Now if I make a cross multiplication here, then it will become like this. F plus 5 lakh into 1 is F plus 5 lakh is equal to 0.4 into 50 lakh, right? Now F plus 5 lakh, I am keeping it on LHS. Right hand side 0.4 into 50 lakh, you will get 20 lakh. Now bring this 5 lakh to RHS. So plus 5 lakh will become minus 5 lakh. F is equal to 20 lakh minus 5 lakh, 15 lakh. So we got the fixed cost as 15 lakh. Now easily we can find out the BEP. Remember the formula. Note it down immediately. The BEP formula is fixed cost by PV ratio, profit volume ratio. Fixed cost just now we have calculated 15 lakh. And PV ratio is given in the problem 40%. So in denominator you can take 40% or you can take 0.4. So 0.4 I have taken. 15 lakh divided by 0.4, 37 lakh 50,000. This is the break even point. That's it. Now, fifth problem. Problem number 5. From the following data, find out BEP and the selling price per unit if the BEP is brought down to 2000 units. So two different questions are there. The first question, it is asking you to calculate the BEP. And second question, it is asking you what is the new selling price per unit if the BEP is brought down to 2000 units. The information given in the problem is fixed expenses are 20,000 rupees. Selling price is 25 rupees and variable cost is 20 rupees. So here per unit information is given. So we can calculate BEP in units, right? So here fixed cost 20,000, selling price per unit 25, variable cost per unit 20. This is the information given. BEP in units, formula fixed cost by SP minus VC. So fixed cost 20,000, SP 25, VC 20. So 20,000 by 5, you will get 4,000 units. So we got BEP is equal to 4,000 units. First question completed. If you want BEP in rupees, multiply the BEP in units with the selling price per unit. So BEP in units we got 4,000 units and selling price is 25 here. Multiply 4,000 into 25, 1 lakh rupees is the BEP. That's it. First part we have completed, we have calculated the BEP. Second part, what is the new selling price per unit if the BEP is brought down to 2000 units? Presently our BEP is 4,000 units. Now we want to bring down the BEP to 2000 units. What is the new selling price? So selling price per unit is how much if the BEP is brought down to 2000 units. Again applying the same formula, BEP in units is equal to fixed cost by SP minus VC. Now new BEP is given in the problem 2000. Then fixed cost already we know given in the problem 20,000 divided by SP. New SP we have to find out. So simply I am writing on SP. VC, variable cost same. How much is the variable cost here? 20 rupees. So this equation, now cross multiply this 2000 into SP minus 20. So 2000 into SP minus 20 is equal to 20,000 into 1 is 20,000. Right? Now bring this 2000 from LHS to RHS. So here in between 2000 and this bracket there is a multiplication sign. So if you bring it to the RHS side, RHS, it will be in denominator. So 2000 will be taken in denominator. So 20,000 by 2000, you will get 10 rupees. So SP minus 20 is equal to 10. Now take this 20 to RHS. So minus 20 will become plus 20. So SP will be 10 plus 20, 30. So new selling price per unit will be 30 rupees if the BEP is brought down to 2000 units. That's all. So 5 problems so far I have completed. Now see the 6th problem. Problem number 6. From the following figures, calculate the sales required to earn a profit of rupees 1,20,000. The desired profit. The company wants to earn a desired profit of 1,20,000. How much sales to be conducted? Data given, sales are 6 lakh, variable cost 3,75,000, fixed cost 1,80,000. First time we are going to apply the formula for sales required to earn a desired profit. The formula is fixed cost plus desired profit divided by PV ratio. Fixed cost plus desired profit. Fixed cost is directly given in the problem 1,80,000. Desired profit is also given in the problem 1,20,000. So fixed cost 1,80,000, desired profit 1,20,000 given. The only thing is PV ratio. That is not given. So we need the PV ratio. Here, sales 6 lakh, variable cost 375, fixed cost 1 lakh, PV ratio is equal to C by S into 100. So in place of C, I am writing S minus V because we have sales and we have variable cost. So sales are 6 lakh, variable cost is 3,75,000 divided by 6 lakh into 100. So 6 lakh minus 375, 225 by 6 lakh into 100, 37.5%. So we got the PV ratio as 37.5%. Now finally, sales required to earn a desired profit of 1,20,000. First time we are applying the formula. So write it down immediately. Fixed cost plus desired profit divided by PV ratio. In the coming problems also, we come across this situation. Now fixed cost is 1,80,000 given and desired profit is 1,20,000. PV ratio, just now we have calculated 37.5%. You can take 37.5% or you can take the fraction. The fraction means 37.5 divided by 100. You will get fraction 0.375. 0.375. So 1,80,000 plus 120, 3 lakh divided by 0.375, 8 lakh rupees. So this sales is 8 lakh rupees. When the sales are 8 lakh rupees, we will get the desired profit of 1,20,000. That's it. So this is the sixth problem. Now problem number 7. When sales are 1 lakh rupees, total cost 80,000, fixed cost 20,000. Actually, total cost consists of fixed cost plus variable cost. So here fixed cost is 20,000 and total cost is 80,000. So 80,000 minus 20,000, you will get 60,000. That is the variable cost. And the net profit is 20,000. Calculate PV ratio, BEP and MOS. Profit volume ratio, break-even point and margin of safety. These three items we have to find out, right? Come on, one by one we'll calculate. Total sales are 1 lakh. Total cost is 80,000. Fixed cost is 20,000. This is given in the problem. So variable cost is equal to total cost minus fixed cost. Total cost 80,000, fixed cost 20,000. So variable cost is 60,000, right? Now we can calculate PV ratio. PV ratio is equal to C by S into 100. In place of C, we can write either S minus V or we can write F plus P. So in our problem, S and V both are given. So we'll take S minus V by S into 100. So sales are 1 lakh rupees. And variable cost, just now we have calculated 60,000. So 1 lakh minus 60,000 by 1 lakh into 100. 40,000 by 1 lakh into 100, 40%. So one item we got PV ratio 40%. Next one is BP, break-even point is equal to fixed cost by PV ratio. The fixed cost is given in the problem 20,000. Here fixed cost 20,000 divided by PV ratio 0.4. We can take 40% or we can take 0.4. So 0.4 is 50,000. Two items we got. We have calculated PV ratio, we have calculated BP. Now we need MOS, margin of safety. Two formulas are there for calculating margin of safety. One formula, actual sales minus break-even sales. The actual sales are given 1 lakh. Here 1 lakh. And break-even sales, just now we have calculated BEP. BEP 50,000. This is the break-even sales. So 1 lakh minus 50,000 is 50,000. That is the margin of safety. Apart from this, One more formula is there, MOS. For your convenience, for your understanding, I am giving both the formulas. So MOS is equal to profit by PV ratio. Profit by PV ratio. So profit is how much given in the problem? 20,000. 20,000 divided by 0.4, 50,000. So either you apply this formula, actual sales minus BEP sales, or you apply the formula profit by PV ratio. By both the formulas, you will get the same answer of MOS, 50,000. That's all. So in this video, I have completed 7 problems. First video on problems on CVP analysis. 7 problems I have completed. Inshallah, in the next video, we'll continue with the 8th problem. So if you are satisfied with my lecture, give a like to the video. Share my channel among your group, among your friends circles, so that more students can watch the video and enhance their knowledge. Subscribe my channel if you have not yet subscribed. Give your comments. And lastly, buy the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.